Yeah, there we go. All right, you should be good now, YouTube. Of course, there's a bit of a delay, so we'll just get to working through it. If you look at the levels that we've got overhead, that 7,000 in the SPX, it's still a significant level. There's so much drama over our head. Just getting there would be an issue. As we get closer to next Friday and that expiration, it's likely that we could end up pinning into that 7,000 just because of the size of it, right? Just how it would draw us in. Now, between now and then, they could begin to unwind all of that, and then it wouldn't be there anyways. But that would happen closer to the end of next week. So we would still not know for sure until, we get into that late Wednesday, mid Thursday kind of situation. It's a long ways off, all things considered, right? So we still do have a lot of trash surrounding that range that we've been talking about. The gamma flip point, 68.45. So if we come back over and look at that level, that's the 7,000 right there. And I had this picture that I was going to share in the chat. I'm sure I'll get around to it. It was from Spot Gamma, and it shows that 7,000 using a different perspective, but it's a massive level. So we want to keep our eye on that level. You could consider developing some YOLOs around that. Just make sure whatever you put on is really cheap because it has a very low chance of being a winning trade. I know this concept kind of gets lost on newer traders, but it's not about winning and losing, right? It's about how much you lose when you're wrong versus how much you win when you're right. So if you can put on a really low risk trade, say an options contract for $5 or $10, that's 5 or 10 pennies in options number. If you're wrong, you're wrong, so what? Right? Not a big deal. You pay more than that for a meal at McDonald's. But if you spend 5 pennies and that contract hits, say like just a straight long call or something like a call vertical, that hits is going to pay out really well. So it is a low probability trade at this point, and it's next week. But if you can price it in at a risk cost that is so low you just don't care about the outcome, then throw it on and let it ride. If you can't find a call by itself that's cheap enough, you could consider a vertical and or a butterfly. Butterflies are a really good way to keep the trade cheaper, but the other side of that too is just how low the success rate is for short-term butterflies. So 7,000, you could stagger those butterflies out, right? Something like 6,950, 7,000, 6,900. Just scatter them all across for next week. But keep in mind, we're going to get some drama on Wednesday of next week with the FOMC. And so if you are going to spread them out into different strikes, different expiries, just keep Wednesday in mind of the drama day that it is very likely going to be. Even with the Strategic Petroleum release announcement, one of the largest in history, we're still seeing crude dominate. At some point, that is going to change just remember, markets can stay irrational longer than you can stay solvent. Trying to short crude would be like trying to short VIX right now. I mean, that trade will be right eventually, but how long is it going to take, right? You can't time, you just can't time it. Which one of you keeps dinging? I think it's this one. All right, so that put wall held last night. First test. The trick is it going to continue to hold? Underneath that put wall, we have the 200-day moving average. We were able to cut through it the last time we got down there, so I wouldn't expect anything different this time. It's not necessarily a form of support or resistance, more of a line in the sand. We're underneath all of the other major moving averages, so any consideration of an upside move has to consider that we've got nothing but drama overhead. You can see how they're all spread out really nice. The distance is uniform, the angle is clear. This is like a fork pattern. And generally speaking, if you wanted to take directional moves in something, that's the way you would want to see the moving averages laid out, right? You don't want them all tangled and spaghettied together, crossing back and forth and just all tangled up. You want nice, clean, spread out indicators just like that. They're not a timing tool or a mechanism for entry, since they are lagging by however large their number is, right? 20-day, 50-day, 10-day, it's quite a lag. So you wouldn't use these for any sort of triggers or timing mechanisms. They're more of a perspective on what we've got and where we've come from, not what's happening next. And I think a lot of people just fail to grasp that logic. So 66.93, 92 is a cog line. The 200-day right now at this point is the 66 cog line, 66.92. Underneath that, we're running 50s. So 66.50, 6600, and then 65.50. The other side of that is the 7,000 we were talking about. Until we do the contract change, the ES and the SPX are going to be getting closer and closer in their values. Of course, once we contract change, we'll be looking at like 50 or 70 points different right now. Sometime today, there you go. One think or swim. I tell you what. Yeah, it's about 50 points. The contract that we're on currently, we'll be done with it by Friday. Some brokers will have you trading it Friday. Others will auto roll you by Monday. And then if you're not on a broker that manually rolls you, you'll have to do it yourself. So keep your eye on the volume. When the June contract has more volume than the current contract, it's time to swap. There are other people who use open interest for this. I'm not a fan, but you do you. A good habit is just to watch the volume, and on the day that everybody else begins trading the June, it's time to start trading the June. So you'll see it. The volume will swap places and it'll be significant. You won't miss it. Any push to the upside also is going to have to deal with the zero gamma and the volatility trigger. So we've got that to deal with. Overnight volume at 121,000. They were in there participating, and they didn't get a whole lot done when you think about we are where we were yesterday. All right, so what I just highlighted is yesterday's price action. We had an inside day breakout, took it for a joyride, and now we're back inside the box. So that's really what we want to resolve this morning. Climbing back up through yesterday's zone, maybe even getting a breakout on top of yesterday. At the bare minimum, closing inside of yesterday's range. Otherwise, if we come back outside of yesterday's low, we want to challenge our own Globex low and then challenge the low on the week, which would be around 65.86. Good times, huh? That'd be all the way down yonder. It's not that bad, all things considered. And when you know it, we're dancing around that midpoint. So if we break our own Globex low, we're already through the midpoint for the week. So we won't have much impediment. We won't have many things in our way. That's our Globex mid, 67.38. So if we drop back down, break our Globex mid, get through this week's mid, take out the Globex low, then we can expand to the downside. Otherwise, run it back up, get through our own Globex high, and we can work on yesterday's levels. That's the midpoint for all of yesterday. I could have taken just the RTH and it would have brought the midpoint down a little bit, but it's not worth having two for yesterday. Sometimes it is. Sometimes you really need one for the RTH and then one for the Globex. But with them being so close, I think you're better off just using the full day of yesterday, not even worrying about marking out the RTH, and just call it good with a single line. So if we can get through our Globex high, get through the mid, take out yesterday's high, and then we can challenge the high of the week, 68.50. That'll be a good start on making our run up to that 7,000 level. All things considered, we got a pretty nice looking day ahead of us. I was talking to people yesterday and they were talking about how it was not really much fun trading yesterday. And I get it. That is some pretty ugly price action. The thing is, a lot of times we kind of know in advance what kind of day we're going to have. It's not guaranteed, it's not perfect, but in the morning briefing, I try most days to help point out or articulate, is today supposed to be a sideways day or not? And we get it right more often than we don't. And if we can't tell, then, we don't know, right? There's nothing wrong with saying we don't know. What we knew about yesterday is that we were starting inside of our own Globex range. And any day that you start inside of your own Globex range, when you get into the 9:30 open, then you already know you're in the box, and you have to get out of that box if you're going to get anything good. Now, we got outside of it, but we didn't keep it, and we came right back in again. And we spent the day challenging that box and really just not having very good price action at all. Inside of that, our Globex yesterday was inside of the previous day's range and the previous Globex range. So this sort of, quote, hurry up and wait behavior leads to some really nasty price action. If you don't like how things were trading yesterday, then look to get outside of the box first. Right now, we are outside of this really large box that we've been in, but we're now in a new box. So that's what we need to see change, right? If we stay in this lower box, That's going to be the drama spot. And if we expand to the downside, then it's nice and clean. We're not in the box anymore, and you could see much better price action. We have reached the ADR low already. The day is half done, but when we get down to one end or the other early enough in the day, we can make it to the other side by the end of the day. That's not necessarily considered bullish in this scenario. Yeah, we're talking about making a move to the upside, but we would only be going up to complete the wave, right? Price moves in a wave. Generally speaking, we want it to do that. It would be pretty scary if the market wasn't two-sided and it just went down, 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 or up, 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 right? Kind of wanted to make waves back and forth. So we need that upside move. That would not give us an inside day breakout, although it would get us to yesterday's high. I've been using this ADR line for years, but it was only in the last 2 years that I was able to apply those lines to previous days and look back. So I got comfortable using these on a day-by-day basis. When we get to one edge early enough in the day, we can go to the other side by the end of the day. I know that because I've seen it happen over and over and over again. It's not guaranteed, nothing is, but it is a behavior and a concept that I've witnessed so many times that there's just absolutely no doubt in my mind that a move up, in this case, it could have been the other way around, but a move up is not only possible, it's probable. The problem with that is we're still going to be inside of the same nasty, choppy range that we were in yesterday. So we might get up there, but that doesn't mean it's going to be nice, clean price action. And once we get there, it doesn't have to shut down and stop there. We could get a breakout of yesterday's high, maybe challenge the upper ADR line. Why not, right? That would give us a breakout on the week, but we need to first just get to the upper ADR. So that's what we want to focus on. We want to focus on getting up there or anything that suggests we're not going to, like breaking back down through our Globex mid, which suggests we're not going to go to the Globex high. Today's floor pivot is lower than yesterday's. That's bearish. Price opened underneath it. That's also bearish. So far today, we have a MDP. That's a missed daily pivot. It won't count until tomorrow, though. We would have to go all day today without hitting it, and then look back and say, oh, wow, look, we didn't hit it all day. So for now, it is an MDP in the making, but it doesn't count. And if we make this move to the upside that we've been evaluating, it won't be an MDP for long. We are underneath the weekly channel, and I think if we get that close to it, we're probably just going to hit it anyways. So if we want to get to that upper ADR line, we're going to need to cross through both floor channel pivots and the channels themselves, and then get that breakout. It seems like a tall order at this point because we don't have anything to suggest that we're going to make that move. But that's usually how it goes anyways, right? Most of the time when I make this statement about we're at one edge and we can now go to the other edge by the end of the day, most of the time we don't have any reason to think we're going to get that. And yet, a lot of times we do anyways. We made it down to S2. At this point, we do not want to cross back down below S1. That opens the door to get us back to S2 and then eventually to S3, 6632 cog line all the way down yonder. I don't think we want to do that. It doesn't line up perfectly. Of course, I missed this upper edge a little bit, but close enough. The midpoint of this week is just above that S2 line. So if we get down and get outside of our own Globex low, then you know we've already expanded below S2 and we're below the 50% mark for the week. And it's much more likely that we will revisit the low of the week if we breach that level, right? So just use something easy to remember like 6,700. If we get below 6,700, 6,580 or 6,600 is on the table. So some lottos for Friday on the put side, possibly. Just keep in mind we're getting closer and closer to FOMC, and the markets will start to run that hurry up and wait mode more likely than not. You've had a taste of it already this week with Tuesday and Wednesday's sideways price action and hurry up and wait. It's not much fun. There's a reason that some traders take FOMC week off, the whole week. It's when they get their honeydews done or they take a vacation or they just go do something else. Not me. I'm a sucker for punishment. We're still building out that P-shaped profile for the week. If I stay zoomed out like this, you can see it. We're in the thin area, although we do have a little bit of a distribution box here, and we're on the bottom of that. If we break it, it gets really thin real fast. We can move through thin areas relatively easy. And at that point, we would need to see the market play save a hoe, or maybe sellers get exhausted, bring it back in. I wouldn't count on buyers stepping in to run it back up, but we could hit a pivot down there or something. We don't have anything back here that we could drag forward. We got a 6,600, but that's going to be too low to help us out, right? That one right there. I remember this one. Wasn't that long ago, right? Back in September. We had 4 of these in a row where they all stacked up really nice. Imagine that. So the low of this week, this 6,600, lines up with that point of control. We wicked into it, and that leaves it on the table. So we still got something there. That's all we've got down there. I guess we'll take it, right? That's better than nothing. 10-day, 30-minute volume profile and TPO, we're outside of the box. The point of control on the TPO has shifted down, so we're going to be looking to see that same thing happen in the volume profile. We've got 1 day left against the top of this, and then the box is going to narrow a little bit. Not much, all things considered, right? I think we're cutting 50 points off, maybe. Since we've expanded this week to the downside, we still have a relatively wide range. What I was looking for last week going into the close was to have this narrower range without that big drop down, right? But we started the week with that drop down, and now we're really struggling to stay inside of last week's range. It is another level to keep on your radar. Last week's low, whether you're using Tuesday or that Friday dip where we wicked it down, it's just one more level that matches up with the low that we've been focused on this morning. All right, so we're tagging that Monday VPOC. It's not a VPOC anymore because we've hit it, but we hit it this morning, and I'm going to go ahead and keep it on there all day in case we revisit that level. You don't really need that line because it's a cog line anyways, 6711. It's already on our radar, but whatever, we'll keep the line there. After today, that line is done, we'll remove it. Looking at what we got from yesterday, we developed a new VPOC line. So we've got the 11th, and now we're stacking up a number of those overhead. I know that kind of seems like it would be more difficult to go up because of those, but I don't see it that way. We get near them, we can get drawn into them. And suppose they are heavy shorts, right? That is making some pretty large assumptions, but hear me out. Suppose that is a short, a lot of shorts, and this is a lot of shorts. If we break our own Globex high and we run into all those shorts and those shorts want to cover, they've got to buy to close. That'll add to the buying, fuel our move to the upside, and get us into the next pocket of shorts, which would force them to buy to close, which would add to the buying, which would add to the exuberance, get the week's breakout, and we make a run towards this next level. It's that popcorn stop, I can never remember the name of that. But that's not a concept of mine either. And it is making assumptions. Now, there's research that you can do to try to figure out, what was the dominant trading that day. Cumulative delta would be a good way to go, right? Using footprint charts and things like that. You can try to determine who was dominant, but look at where we came from. We went down and continued to go down from Tuesday into Wednesday and to where we are now this morning. It's not reaching much to suggest it's probably a lot of sellers. So if we start to get that push to the upside, it's very likely this will become gravity. And then once we get into it, they'll just fuel us even higher. If we don't see that in the time and sales and on the dome and within the queue, within the order flow tools that we can use, then fine, it's not there and we let it go. But I would be watching for it. I've mentioned it multiple times this week, but Friday's candle is the candle that we want to keep our eye on. The midpoint of Friday, the low of Friday, those two right now are the most important. Once we get through the midpoint, if that happens, then we can focus on the high of Friday. But for right now, the mid and the low are our greatest concern. So that's what we want to deal with. We are 1% below the 10-day. That is not oversold. We have not moved too far too fast, and it does not owe us any sort of mean reversion. It does suggest that we're not in the center of the basketball court, and we've already moved to one side of the court about halfway. So, near the top of the keys. We could continue in the same direction to the downside, but we've only got another 1% to go, maybe 1.5%, and then we're going to start to run into that drama. On the other hand, making a move to the upside would be going from the keys on one side of the basketball court all the way to the basketball goal on the other side of the court. Plenty of room to reach 2% up here, right? That'd be a 1% move back to zero and another 2% to the upside, and we still wouldn't be overbought at that point. So we could make a 3% move and we wouldn't be overbought. We might be getting close to considering an overbought state, but we wouldn't be overbought yet. The path of least resistance is not up, by the way. But looking at this, we don't have much more to the downside before we do start running into that trouble of having moved too far too fast. Looking at the 10-week, more than 1.5% to the downside. If we were below 2.5%, maybe getting into 3 or 3.5% below the 10-week, I'd be more concerned. But we're near the point where it's make or break. We can look back in the past and see that this is right around the time we need to turn back, or we're just going to get a lot deeper. We also need to concern with how long we're down here. If it was one and done, we would already be back, and we're not back. We're still hanging out. How much longer we hang out down here is going to begin to become an issue. So keep your eye on the distance from the 10-week. I think if we get beyond, say, 3.5 or 4, then it's likely we're going to get a lot deeper and perhaps really quick. It doesn't quite put us in a flash crash situation from this point yet, but it's what I would be worried about if we do get into that 3.5 to 4% range. We've seen it before. We will see it again. I just don't see it here yet unless we get some kind of headline that we don't know about, right? There's this great phrase that someone said, and it's not me, but I picked it up because I really like it. Crashes come when we're already oversold, right? They come from the bottoms. So if you're worried about crashes and you're already at the lows, then you're thinking in the right way. When we're midway through a range or we're near the upper edge of the range, crashing from the highs isn't the concern. So if we get down 3.5 or 4% below the 10-week, that's when we really want to be concerned. Looking at what's moving around out there, the benchmark we use is 0.5%. We got value, China, generic tech, consumer discretionary, emerging markets, which is basically China again, chips, banks, jets, finance, generic, all down. So we're not getting any help from any of that. Bitcoin is down too, but not enough. We want to keep our eye on that, see if it gets a little worse. Gold miners, the mags, all down, just not down enough. Looking at what's up this morning. Energy, generic energy, and the VIX. That's it. That's all we got. That's not really inspiring, right? If we're looking for what could trigger a move to the upside, the sectors and the industries that we've got moving this morning aren't going to do it. And that doesn't mean it can't happen, but every day we're looking for what could give us that breakout that we're all wanting. It could be sectors and industries, but this morning it is not. So no market breadth yet. The good thing is if that does begin to come in once the bell rings, you'll see it pretty easy, right? It won't be hard to miss. We'll go from everything out there being red to seeing everything out there turn green. So that'll be pretty easy to spot. If it's not the broader market with a rising tide, it could just be something like the Mag 7 and Bitcoin. Just those two alone can get it done. Consumer discretionary, the chips, Mag 7 really is easy to spot. So we could get that. Treasuries, commodities, a drop in oil or a drop in VIX, either or both, could certainly do it. So it's not like we don't know where to look. We just got to keep our eye on it, see if we get that sort of assistance. So watch crude and watch oil. That's simple enough. Keep your eye on the Mag 7, see if they start making moves to the upside that might make our life a little bit easier. I tend to use KRE rather than XLF because this is banks itself. XLF, it has trading desks and insurance companies and just all kinds of stuff gets thrown in there. So I watch the banks and then the mags. The mags can do it all by themselves as long as the broader market isn't going the wrong way. All it has to do is not fall, and the mags can carry us higher. But why would they? Right? So if we don't have them, if we don't have financials, some consumer discretionary, then it won't be market breadth. We'll have to look somewhere else. The VIX, crude, treasuries, FX markets, something. That's what we want to continue to poke around and look for today to try to answer that question. What's going to help us get up here and hit this upper red line, the ADR high? And remember, if we break down, we've got targets in both directions. All we got to do is get outside of this box, and we just run it level by level and continue to target the next level until we turn around. So for right now, I'm not looking to play an inside day. Why would I, right? We're already outside of yesterday's range. So unless we get back inside of that, I'm not playing inside day at this point. We need to get outside of our own Globex range. To the upside, that would put us back into yesterday and we'll challenge those higher levels. But to the downside, I like the low of the week. I like it a lot. So what I got for you guys, be careful, be safe, watch the clock. Don't forget, we got that 30-year today at 1. I see y'all tomorrow.